Edward Morse, I must start with your thoughts on what we've observed from the Kingdom of Saudi Arabia in the last number of days.
Well, we've seen an impact on the oil market with a calming of the markets after a little temper tantrum that came on from on high, indicating that they might pull oil off the market to punish the world economy if anybody took sanctions against them.
Do they have that power? Do they have the ability to move oil by single whim, by political reaction?
They have the ability, and the question is, what are the long-term consequences? And as they've shown themselves in the past, the long-term consequences are rather dire. It not only brings about a lower level of demand, probably through a significant recession, but it also spurs on growth in alternative fuels and growth in competition from the United States and other non-OPEC countries. So
Ed, have you ever seen? Right. Have you ever seen the, OPEC and its allies kind of go from one thing to the other quite so quickly? So 2 days ago, we had the Saudi Arabian oil minister saying that they're going to pump as much as they need to. And now, because of inventories, because of concern about economics around the world, they're talking about curtailing it.
Well, they're a little bit confused about the market. They didn't look at the thing they've been studying for the last 3 years, namely how financial flows of the market impact prices. They didn't look to see that when oil went to $86 for Brent crude and WTI went up, that was a function of financial flows of the market. The managed money situation in the market went from one record level of a ratio of longs to shorts to another, went right through the old record of 10-to-1 longs versus shorts to 11 to 12 to 13 to 14. The price went up with it. And then for a number of reasons associated in part with the fundamentals not changing, there was a sell-off. That sell-off has continued. So we've actually seen two $10 swings that have nothing to do with market fundamentals, have a lot to do with financial flows. And had they just waited a bit, they probably would see that markets are going to get tighter by the end of the fourth quarter. Prices will go up. It's a volatile world, and that's the lesson they should learn, not to speak on the basis of financial flows.